Hi everyone, I'm Connor. Welcome back to another episode of What's Trending on YCharts. Today, we're going to be talking about falling PE ratios for some of the largest stocks in the market. We'll talk about what it means to go market neutral, and we'll also take a look at some record moves in the 30-year mortgage rate. Each month, we share our own data with you so that you know the stocks, ETFs, mutual funds, and Econ data people are searching for, so that you stay informed and can make smarter investment decisions. Now let's take a look at what's trending. All right, let's kick it off with company and stock data. As we typically see, it's the largest companies in the US that are receiving the largest amount of traffic on YCharts. Popular searches also focused on PE ratios, telling us a lot of folks are checking in on valuations for equities this month. And some of those names include Apple, Amazon, Tesla, Nvidia, Microsoft, and Meta Platforms, formerly Facebook. And since valuations seem to be a focal point, let's take a look at how these stocks' PE ratios have trended over time. And it's possibly good news. The prices that investors are paying for $1 of earnings from these companies is on the decline. Looking back over the last 3 years, each of these 5 companies set a period high PE ratio in the second half of 2020 as the market was surging higher. And now each price multiple is much lower a year and a half later. Taking a look at Tesla in particular, it had no earnings per share because it had no earnings up until July 2020. Then it peaked at more than 1,400, and now the PE ratio is down to just 100. And some folks might even still say it's too expensive. Transitioning over to the hottest company pages in the month of May, those with the most month-over-month page view growth. Topping the list are a lot of retail and tech stocks. We heard a lot about retail this month. Target, Costco, and Walmart all on this list, possibly for the wrong reasons, as well as Coinbase, Airbnb, Snowflake, and rounding out the list, Berkshire Hathaway A shares, also rising perhaps due to news coming out of the shareholder meeting in Omaha last month. Now let's take a look at the youngest public companies on this list. Like Billy Joel said, only the good die young, right? And here we have Snowflake in orange, which IPO'd back in September 2020, Airbnb in blue, IPO'd December 2020, and Coinbase in purple, which IPO'd in April of 2021. The current uncertainty in the market has been particularly unkind to these young growth tech stocks. And this is what tends to happen when markets go south and volatility hits. These stocks, which represent the riskiest and probably smallest positions in a lot of our portfolios, get sold off. That's definitely what we're seeing to start 2022. Okay, let's take a look at the most popular ETFs and mutual funds on YCharts this month. A lot of well-known ETFs here topping the list, like SPY, QQQ, VOO, and the ARK Innovation ETF, ARKK. There's also Vanguard's Total Market ETF, VTI, and on the fixed income side, AGG. Let's look at these funds with a visual, and we're going to cheat a little bit by bringing in some Econ data, the 10-year Treasury rate. Here we're looking at year-to-date total returns, and we can easily see that AGG, fixed income, is down the least. That's in green, and it's followed by SPY, QQQ, and ARKK in that order. But here with the 10-year Treasury rate overlaid in pink, we are illustrating how interest rates have been a key driver of equity moves so far this year. Whenever that 10-year rate rises, stocks have pulled back. And the 2 small breaks we've gotten in the market this year, which came in March and May, have come after that 10-year rate cools off a bit. So we're definitely watching to see which direction the rate moves in next and throughout the end of the year. And now looking at the hottest fund pages on YCharts with the largest month-over-month page view growth. Topping the list are the Vanguard Market Neutral Fund, and we will take a closer look at this one in a second. Then we see, all from Fidelity, a natural resources ETF, also semiconductors and energy sector fund, the NASDAQ 100 covered call ETF, QYLD, and then some other money market funds and the Transamerica Capital Growth Fund rounding out this list. But going back to market neutrality, This visual is great for illustrating exactly what market neutral means in context of the S&P 500. Our middle panel shows beta, which for this market neutral fund is floating right around 0 as it would be expected, and it's floating right around 1 for SPY. The bottom panel shows alpha, and we see SPY's alpha is 0, again to be expected, but alpha for this market neutral fund is really taking off in 2022. In the top panel, though, you can see that this fund, the market neutral fund, really underperforms over the long term. It just has the potential to shine during some of these market pullbacks like we're experiencing right now. To be sure, this is an alternative category fund, and even Vanguard says it's best as a small part of a well-balanced portfolio. But if you're looking for some stability and maybe opportunity here in 2022, it's worth a look at some market neutral funds. And now the most popular Econ data pages on YCharts from the last month. Topping the list, the 10-year Treasury rate, followed by the 5-year, 1-year, and 3-month Treasury products as well. The U.S. inflation rate, which has been a mainstay for better or worse on this list. Retail gas prices, the SIBO equity put-to-call ratio, 30-year mortgage rate, and the 10 to 2-year Treasury yield spread were all popular this month. Taking a look at that 30-year mortgage rate, this chart is just crazy to me. It is very hard to think about people paying 18% on their mortgage back in the 1980s, and then to compare that to just a year ago when we saw that all-time low of 2.65% for a 30-year mortgage in 2021. Now, just 6 to 8 months later, mortgage rates are rising and they've topped a decade high, more than 5.25%. It goes to show you that everything is relative, but also just how much that housing market has changed in the last 30 years and the lending market along with it. Closing things down, the hottest Econ data pages on YCharts for May of 2022. We saw lots of earnings and valuation focused Econ data pages in this list, all related to the S&P 500. We also see the expected change in inflation rates, an interesting one. FINRA margin debt, diesel prices, the foreign exchange rate for the US dollar to Chinese yuan, and the market cap of Bitcoin, which is now below 600 billion, down 50% from 1.2 trillion late in 2021. But looking at those market-wide PE ratios, as of late, the S&P 500 PE is coming back down from this most recent spike we saw. We've overlaid U.S. recessions in gray to show you that this is typically the case post-U.S. recession. The market's PE ratio will spike and then start to recede from there. And we've also added the S&P 500 level in green to show that while there's certainly a pattern here for the S&P 500, its PE ratio, and its cyclically adjusted PE, the Cape-Shiller, things have become a little disjointed recently, and simply put, these days stocks are rising faster and crashing higher in response to valuation trends. So getting a little swingier in the market so far this year. All right, everyone, thanks for watching What's Trending on YCharts. As a quick refresher, we talked about those market-leading stocks and their crashing PE ratios. We also took a look at a market-neutral mutual fund and investigated the pros and cons. And finally, we talked about the 30-year mortgage rate, up drastically year over year, but still much lower over the long term. Don't forget to hit subscribe below, and we'll catch you next time with What's Trending.